Let's get right into it. Now, I'm not going over just any deductions. I'm going over a little more advanced items that people don't think of as much, and certainly accounts don't address quite as much. So let's get right into it. Deductions for your business. Home office deduction. Now, I see you probably see, excuse me, that I have S Corp written there. Of course, you can take a home office deduction if you're a sole proprietor, but can you take it if you're an S Corp? And the rules say you cannot take a home office deduction at your personal return level if you're an S Corp. So what we do instead is the S Corp requires you as a shareholder to have a home office in the minutes, and you say as an individual that I need to be reimbursed from that from my company. The company reimburses you for the home office portion. We take a deduction at the S Corp level. And that seems to work just fine. So that's often overlooked deduction. By the way, we're looking to address businesses in the area of a couple 100,000 gross all the way up to 10 million. These all apply. It could be bigger even than 10 million, but that's the area we're looking at. The next item is employ your teenagers, and it really relates to employ your children or relatives if you want. And this is a way to deduct expenses in your business while not paying any tax at the personal level for the child. So if I have a child that's 12 years old and maybe also a child that's 13 years old, I might go ahead and pay them $1,000 a month each on wages, registered on wages on a W-2 at the end of the year. Do it the right way. And if I'm a sole proprietor, there's zero payroll tax. And the child can make up to $12,000 in wages without paying any tax. So now I've gotten a $12,000 deduction for each child without paying any taxes, save money at the corporate level, income tax, payroll tax, all of that for me, or at the sole proprietor level. Now, people often say to me, well, that's okay, I've heard of that. That sounds good. And you can double up here because people ask me, how do I get a deduction for saving for college? Well, if you pay the child, they have to open an account. You put in that account, you say it's a college account. You save $12,000 a year for 6-7 years. You can imagine it adds up. You have $100,000 with earnings in there by the time they go to college, and you deducted the whole amount. Now you take that money, you pay the tuition with it, and by the way, you get a tuition credit if you're within the right income also. Excellent way to get things to happen. But you've got to follow the rules, often overlooked. Pension planning. Oftentimes, people don't think about it. They're complicated issues sometimes. You might need to get a pension administration company to give you your choices, all the way from sole proprietors, all the way up to C Corps. There are areas of pension planning would be like an IRA for an individual. You could do a SEP, Simplified Employee Pension Plan. It's sort of like a profit sharing plan. You do that at the individual sole proprietor level or a corporation or an LLC. You can move to a Unit K if you don't have employees. That's a single member 401k. And you could then go to a defined benefit plan. And I put them in the order of complication, getting more complicated as I moved on, and a higher deduction. So with a Unit K and a spouse participating, you can get $40,000 or $50,000 into a Unit K per year without too much complication. Defined benefit gets more complicated, it's more expensive. The key is, I don't expect you to know all of these. I expect you to know that you need to do them. Talk to your preparer about it, find out which one is right for you based on whether you have employees or don't have employees and how much you want to be putting in and the complication and the cost. Don't overlook pension planning because this is a way to fund your retirement.